Bored of Brexit yet? No, we're not either. Hi, it's Rob B with Rob D, and this is the Property Podcast. And this week, we're looking at the Brexit, what's going to happen next, and the lessons we can learn from it.
Yes, welcome to the Property Podcast. This is episode 173, an episode that, if we're honest, we didn't think that we would be recording because we didn't think that things would go quite the way they did. But we did our special episode on Brexit last week, so you should have that in your feed. That was a quick reaction just a couple of days after it happened. We've now had another week of mulling it over, thinking about it a lot, talking to a lot of different people. And so we're in a position now to talk about it even more and to also see what lessons we can draw from the whole thing. Regardless of what you think about how the result went, there are some interesting lessons in there that are kind of separate from that. So we've got all that coming up, plus a cracking resource of the week. But first, we just need to remind you that today is Meetup Day.
It is, hurrah! And I can't wait. This evening, as you listen to this, if you listen to it on the day it comes out, I will be in Leeds. Long-time listener, Andy Norman, is the meetup leader of the Leeds meetup, so really looking forward to meeting Andy again. I know it's a busy group, so I look forward to seeing many of you there. That should be really cool. And Rob, you're going to one of our meetups that's been running a few months now, but it's still quite a new one, and it's in a lovely part of the world.
Yeah, I'm going to Leamington Spa, which I've been looking for. I've got friends there, so I've been looking for an excuse to go for a long time. And the meetup is a perfect excuse. So I think that's one of our smaller groups because obviously geographically it's not quite the same as Leeds, but it's been going for a few months now, seems to be doing really well. So I'm looking forward to saying hello to everyone there. So if you are listening on the day, it's not too late to book. It's completely free, but you do just need to let us know that you're coming. To do that, just go to thepropertyhub.net/meetups. If you go there, you can see everywhere that we've got a meetup. There's, I think, 30 of them this month, something silly like that. So there's bound to be one near you. Even if you're in Stockholm or Dubai or somewhere else, there's still one near you. So do get along, meet some other friendly property folk and talk, I'm sure, about Brexit.
I'm sure you will talk about Brexit. But if you're listening to this after the meetups have passed, don't worry, they're the first Thursday of every single month. So if you look at your calendar now, look for the first Thursday, look at thepropertyhub.net/meetups and find one close to you. As Rob said, there's over 30 now, so you're bound to find one. So check it out, super friendly groups, and Rob and I have discussed multiple times the benefits of going to these type of events and the meetups, as you would expect from the Property Hub. No selling, completely relaxed, super duper people. From super duper people to super duper news. It's probably the biggest event to happen to the UK, at least, for a generation. Brexit. Massive, Rob. Absolutely massive.
Yeah, sometimes we're scrambling around for a news story. Not this week. It's quite clear what's on everyone's mind. So our news story and our topic of the week this week kind of blend into one. There's not really much point talking about anything else. So we're going to talk a lot about what happens next and what lessons you can learn from the whole thing. But as the news portion, well, let's recap what's happened. It probably won't have escaped your attention that we had a referendum and the majority voted to leave. And that was, I don't know, I was kind of looking forward to the whole thing being over and so we could go off and do something else. But it turns out that was really just the start. And since then, it's stepped up several gears and everything's gone a bit nuts. In the immediate aftermath, Rob and I spent Friday in a hotel in Luton having a yellow team training day, and just like it was always quite hard to concentrate because minute by minute there just seemed to be mad stuff happening. The markets crashed and then the markets recovered. So now, a week on when we're recording this, the markets are back to where they were before broadly. Sterling is still very weak. It absolutely plummeted against the dollar. It's picked up a bit of ground now, but it's not quite where it was before. And in political terms, everything just seems to have absolutely imploded. Everyone's gone nuts. Labour, I mean, I don't know what's happened there. People had resigned who I didn't even know had jobs in the first place. Somebody got appointed to replace someone who'd resigned, and then they resigned, which was just like a day later, which is just, it's impossible to keep up what's going on. The whole thing is just a complete mess. It's been a very interesting week.
Yeah, if you go on a parliamentary tour, you might actually get signed up, so be careful. Well, unless you want to, of course. But we're fair here. Labour are a mess, but Conservatives aren't exactly much better. So the leadership contest has just begun. At the point of recording this, we have no idea who the frontrunner is, and probably a week in, still no idea. Who's the right person? It's difficult to say. And that's the thing, the uncertainty isn't great from a political point of view. And there's probably more political uncertainty right now than anything else, which doesn't help because we need people to lead the country. So all this is happening, but what's happened in property since Brexit? Well, nothing really, because it's only been a week. And property is very much a long-term thing, and trends take a while to kick in, and we'll discuss that later in this episode. But it's not like overnight property prices will zoom up or crash down. Property doesn't work that way, which gives people a lot of comfort, because while you see the markets going crazy, property doesn't work that way. It takes time to have an effect. It takes time for the markets to kick in. It isn't apparent straight away what's happening. So, property-wise, not a lot to talk about, but we will talk about what potentially could happen.
We will. And the difficulty in talking about it, one difficulty is that we're a bit shy about making predictions now after last time, but also there's just so much to be resolved. And the uncertainty is kind of the main story in this whole thing, because what happens next? Well, loads of stuff could happen. It's very, very hard to say what's going to happen politically. What happens politically will have a knock-on effect for what happens economically, which will have a knock-on effect on property. So when trying to work out what's going to happen next in property, the only thing we can be sure about is that we're not going to be sure for quite a while. But economically, there's a possibility of a mini recession. A recession is technically negative growth for 2 successive quarters. So whether we'll have a technical recession or not, who knows? But markets do not like uncertainty. So it's almost certainly going to be a bumpy ride. You've then got the whole issue of Scotland. What's going to happen there? Will they stay as part of the United Kingdom or the European Union, or both, or neither? Or I mean, it's just completely up in the air. And then also up in the air, it's worth bearing in mind is what the United Kingdom actually does in terms of the EU, because this whole thing that we've been through is only advisory. And the way in which we exit, the extent to which we exit, is in the hands of people who are not actually in place yet. Because Cameron said that he's not going to do anything before he goes. So we don't know who's going to come in next. We don't know what they're going to do. We don't know how the negotiations are going to go. Will we come out of the EU completely? Will we come to some kind of compromise? It's absolutely impossible to say. So we had the vote. We had the decision. Is that the end of it? Well, really, it's just the start of it. And this uncertainty is going to carry on for quite a while.
But what we can do is we can turn our attention to property now and kind of look at what is happening and what may happen in the future. Now, as I mentioned already, there's a lag in data with property, so it makes it difficult. But I wouldn't be surprised in a month or two's time when we see what happened for the second quarter property-wise, that if London property at best was softening, but possibly falling in prices already before any of the EU referendum stuff kicked in. Now, if that's true, then the fact that the buy-to-let market really doesn't work in London anymore, you can't really make it stack up. Maybe HMOs at a push, but traditional buy-to-let doesn't work from a numbers point of view. Prices were dipping already. The new stamp duty charges that have come in, all these things were probably making, and we'll see, time will tell, but we're probably making certainly the market soften. I think that's a given, and we'll see, but possibly even dipping. Now, if it was dipping already, and I don't think it would be aggressive, maybe just a few percentage points down, what effect will Brexit have? Well, there's the potential that Brexit might magnify that, certainly for the short term in London. Now, this isn't a prediction to say it will, and I know Rob and I have been talking a long time about the London market possibly taking a dip. I think it will dip. It'd be interesting to see if Brexit has a bigger effect on it. That's not to say it will, but it might. But if it does, then for the first time in a long time, maybe in a few years' time, and I only mean a few if it does dip, then London could be very much a buy again. We're very much stay away from London right now as investors ourselves. And it was interesting at the summit a couple of weeks back, when we did a vote for who would invest in London right now, out of the group of 16, I think 3 people said they would. So only 20%. If you'd asked that question maybe 2 years ago, it'd probably be the flip and probably 80%. So it's interesting. Investors don't have confidence in London right now, generally. Probably less confidence after Brexit Be very interesting to watch what happens with London and the prices there. Now, of course, that's London. It's only a bit part of the country. And I know many of the people who listen to this podcast don't invest in London and look elsewhere. So what can we expect elsewhere? Well, again, on the risk of having a mini prediction here, I think probably slower growth, but probably still up by the end of the year. Wouldn't be surprised if property prices in, the major northern towns and cities are actually up when we come to the end of the year. Wouldn't surprise me at all. And then the big one, Rob, that if we're optimists, we hope would happen, is that the tax restrictions that are coming in to buy to let, so the way we're going to be taxed in future, which has obviously not been super popular, there's a possibility that it might go under a new leadership. It's only a possibility, but I think it's fair to say it's got slightly more chance than it had before, which was slim to none.
Yeah, well, that's very much not a prediction, but it is a possibility, especially if the uncertainty does kind of put the brakes on things, because governments are in this weird position anyway where they need to keep the market strong, because having property prices going up makes a certain part of the population feel secure and spend money and vote for them. But then it's also problematic in other ways, and they need to support landlords in certain ways because we represent a large part of the rental market, but then also it's quite popular to bash landlords. And in London, there and the southeast, there genuinely were problems that they were trying to attack using a measure other than just interest rates. So there's all this kind of hodgepodge of incentives, and it's possible that the landlord bashing that seemed like a good idea back last summer when everything was flying and everyone was very pro-property might seem like less of a good idea in a post-Brexit world when everything's a bit up in the air. And also we'll have a new chancellor, so who knows? I don't think it's particularly likely. I wouldn't be kind of making any decisions based on it, but yeah, the percentage, if it was like 1% before, has got up to 10. I don't know, just putting arbitrary numbers on it. But what I'm trying to say is it was extremely unlikely. Now it's just unlikely.
And I think while that's unlikely, if it did happen, it would cause stimulus to the market. And this is where we come back to the 18-year property cycle, where we have the mid-cycle wobble, which we're definitely entering now. Now, one of the things that happens in a wobble is the banks will start to miss the money and try to stimulate the market. And how they will do that is a couple of ways. Well, first of all, the Bank of England, possibly, again, not a prediction, but it's possible, could lower interest rates. So if they lower interest rates, lending becomes cheaper. But in the short space of time since Brexit, there's been news reports out that lenders are starting to cut their rates already, reduce their margins, because they don't want buy-to-let investors to disappear. They want the money. And this is the stimulus that happened before. Remember, if you're a long-time listener to the podcast, we talked about in the past, before the last boom, the interest rates versus the rate offered by mortgage companies, the difference, the margin they were making, was slim to none. They've been making healthy margins for a long time now, but that margin has been slowly eroded as competition increases. And as banks and lenders get used to buy-to-let money and get used to this nice income that's coming in, because they charge, heftier rates than they do against residential properties and bigger fees, if that market disappears, then they'll panic and then start to offer more and more exciting deals to get people in. And all this stimulus that I can see happening in one form or another, whether it's government stimulus, Bank of England, or the lenders, or a combination of the three, because there's a bit of panic, they all go, quick, let's do things. They all do it. And then that's what causes the more aggressive part of the growth cycle, which we'll eventually come to in the next year or two. So while some people might find this scary, if you kind of expected it, predicted it, not Brexit necessarily, but the mid-cycle wobble, then that's why, and you can probably tell from the way Rob and I have been since the Brexit special and this episode, I'm not only relaxed, but sort of excited for one, the wobble happening, because that then validates the whole model in the first place, but two, knowing what comes after the wobble and seeing some of these things that you expect to happen in a wobble already start after a very short space of time. So lots to look out for. It's probably not going to be our last episode on Brexit. Maybe not so much on the lessons, but just updates on what's happening in the market we'll certainly talk more about. But there are definitely lessons we can take away from from Brexit itself. And I think the first one, Rob, and after saying all we've just said, is don't listen to us.
Yeah, really don't, because we called this one wrong, as did a lot of people. That's why you shouldn't particularly listen to any one source as being gospel, least of all us. But instead, you should prepare for all outcomes. And that was what was interesting about this. I think everyone was pretty certain about the way that this was going to go, and it went completely the opposite way. So positioning yourself so that you can benefit whatever happens is the way to do it, rather than just kind of putting everything behind one outcome, because you just don't know. So if you can make sure that you'll profit whatever happens, and you might do better one way or the other, but as long as you'll be okay whatever happens, that's a far better way to be. And then there's also, I think, a really important lesson in here, which is how to react in a crisis or a shock, or when something unexpected happens, because there are multiple things that you can do when that happens. So you woke up last Friday morning, you see that this has happened. What do you do? The best thing to do is probably nothing at all. Whenever there's a crisis, whatever you do as a general rule is wrong. So doing nothing is pretty good. The worst thing that you can do is to panic and just start taking emotionally driven action that seems like, just because feel like you need to do something, right? So it's like a big event has happened. I need to react to this. If you make a decision on that basis, it will probably be the wrong thing. So you should absolutely not panic. What you can do is nothing, or what you can do is find a way to take advantage of what's happened. And there are multiple ways of doing that. There's always ways of profiting from anything that happens. This is something that we touched on in the Brexit special last week, but you can choose to take advantage of the situation. But you can only take advantage if you do a few things. If you educate yourself, and so you know about the ways that you can take advantage. If you don't panic, so you can take clear action that isn't clouded by emotion. And if you ignore not just us, but the media and most other people as well.
Absolutely. Ignore the media. Pete Matthew put out an episode on Brexit a week or two back. It's a must-listen-to episode. We'll link to it in the show notes, because Pete nailed it. He got pretty passionate when he talked about the media, and rightly so. The media leading up to Brexit was a joke, an absolute joke, on both sides. Abysmal. You think they were politicians and political parties in themselves, the way they were going on, and got so passionate behind one side or another, instead of trying to offer some balance. But equally, they've been a joke afterwards as well. And we're not getting much press coverage after this, Rob, are we? Because if you look, and Pete made a great example of this in his podcast, and this is not a spoiler because there's plenty of other good stuff in there, but the markets crashed, as we said earlier, and then recovered. And they actually ended up recovering across the week. So started high, Brexit fell, came back to where they were. In fact, I think the FTSE 100 actually ended up on the week. The media failed to mention that. They did mention the uncertainty, they did mention the shocks, they did mention the crash, but they forgot the little bit at the end, which is the balance. And that's not just, media that's driven by agendas or advertisement revenue. That's the BBC as well. So, got to be very, very, very careful when listening to the media. Do not use it as your investment guide. Remember, the media is hysterical. It's about the here and now, and it's about selling papers or getting clicks. They really have no interest in your financial future. And if they are banging on about something you should do, or something you should panic about, or something you should take advantage of about, either way, even when they're saying everything is good, you probably want to step back and go, whoa, the media is saying this is good. It was happening with property in London. Everyone was jumping on the bandwagon about 12 months ago about how great London is. When the media starts doing that, reel back, because it's probably not a good time. When the media tells you everything's awful, it's probably a time for opportunity. And that's the thing, Rob mentioned opportunity. And if you are confident and you are educated, and this doesn't mean you've got to start going crazy now after listening to this, you can take advantage. Rob and I took action straight after the event. We didn't invest straight away, but we put ourselves in a position to do that. So if you know what's happening, if you're calm and actually see, okay, while everyone's running around with their hands up in the air panicking, what's actually happening? Through the noise, what can I see? If you are educated, if you look at this as a long term, if you look at trends and you look at value in property investment and other assets, then you can take advantage. And that really comes to the point that fear is very, very, very much a powerful thing, but you should be aware of the market's fear and the public's fear and the media's fear, because it shouldn't be your fear.
No, if you're willing to capitalize on this kind of thing, then when everyone else is fearful, it's the whole Warren Buffett thing, then that's the time when the most opportunities are there. Even before the decision happened, for the last few months, certain parts of the market have been very, very quiet, even though those parts of the market really wouldn't have been affected. London's kind of a special case, and London is vulnerable to any kind of shock purely because of where the values are. But there are other types of investment that really would not have been affected either way, yet the market was still really quiet. So there would have been opportunities there because lots of investors would have been kind of sitting out waiting to see what happened. So there'd be deals to be done. There are also deals to be done now because you've not only got people panicking and offloading and doing the wrong thing, but you've got this uncertainty, which we've said is going to last for probably a good couple of years. And so that means that the market might be quieter. People might be pulling out of deals. And that means that there'll be sellers who desperately need to hold a chain together, or they thought they had a sale and now it's been taken away. That means deals to be done. So the worst thing that you can do is panic and go with the herd and do the same as everyone else. Doing nothing is a pretty good thing to do. But if you want to be a bit ballsy, there are going to be opportunities out there more than there have been for a long time. But you can choose to take advantage, or you can choose to just carry on as before. Because again, as like we said last week, the underlying factors that drive the market are exactly the same as they were a couple of weeks ago. The risk is that you get swept up in this whole thing and listen to the media and end up either doing the wrong thing or being put off doing anything at all. If you listen to the media, you just kind of want to go to bed and pull the covers over your head and not do anything at all. But because it's very easy to get put off from doing anything, because if you look for it and the media will always give it to you, there's always a good reason not to do something. So with property, we've seen that very recently. There were the tax changes, and then there was Brexit, and then what's going to be next? There's going to be something. And that's why a lot of people end up never actually doing anything at all. They might be really interested in investing in property or in whatever other thing that you can imagine, but they never actually pull the trigger and get around to taking action because conditions are never perfect. There's always some reason why now isn't the right time. There's always some danger in the future that makes them think, oh, let's just hold back. And that's why they never get anywhere. And if you take that attitude, we've talked about it before, you're going to be very, very disappointed in 10, 20 years' time. And I think the other thing to take from it, which I think ties up this whole thing, is that there's always going to be factors beyond your control. Always. Roughly half of the population are going to be disappointed with what's happened, and there's nothing you can do about it. There's nothing you can do about it whatsoever. And business is about controlling what you can control and adapting to what you can't. There's no point sitting around moaning about it. You've just got to get on with it. And there's always going to be ways that you can make it work. And so it's about the mindset more than it is about any particular strategy, anything that we're not going to tell you what you should be going out and doing right now. We're not going to tell you whether you should be going out and buying more property or less property or the same amount of property. But what you absolutely shouldn't do is kind of feel sorry for yourself or feel scared. Because if you take the attitude that, I'll control what I can control and I'll ignore what I can't and I'll make it work, then you'll always manage to make it work and it'll always be okay.
And that's the key takeaway from this. And there's been a theme through the whole podcast, but kind of remember where you are. Today's just a day in a lifetime of investment. After the announcement, I was pretty emotional, wound up, but only from a political society point of view. From a property investment point of view, I had very clear clarity of what I wanted to do next and how I could take action. And we spoke about this in the Brexit special last week, that from a property point of view, it's business as normal. I think that saying on the internet that's overused, keep calm and carry on, it is applicable here. But actually, possibly over the next 2 years, stay alert and make money. Because whether this is right or wrong, the next 2 years are going to be full of opportunity, we think. And you have to remember that Rob and I aren't always banging the drum for now. Actually, in the last few years of the podcast, we started off saying there's opportunity. Then it went aggressive, and we said, well, certain places you want to start avoiding now, started to be a little calmer. And then the more bad news that's come along, like the tax changes and Brexit, we're now getting more excited. I know we're a little bit different to what the media is saying, but we're not emotional. We're not about the here and now. We're about the long term. And that really is what property is all about. Let's not forget that property is about the long term. You can get opportunities now. You might overpay slightly. You might get a better deal than you will in 6 months' time. Who knows? But it's about the long term. If you don't get quite the best deal today, or you get the best deal you ever get today, as long as you see it as a long-term investment, these little dips, these little troughs, this period of uncertainty really will just be a blip in the lifetime of your investment portfolio.
Well said. So that is where we are now. That's what's happened. That's what might happen next. And that, most importantly, I think, is what you can take away from the whole thing. Whether you think the result is the right thing or the wrong thing, or a scary thing or a great thing, whatever, it doesn't matter. The lessons that you can take from it in terms of the psychology of the whole thing and how to act as an investor will be every bit as applicable in the next kind of major event or the major crisis, because there will be one. So I think those lessons are really, really important. When it comes to Brexit, though, I'm sure we will come back to this topic. And in the meantime, you can get down to a meetup tonight and talk to people about it there. And you can also get over to the forum at the Property Hub, where there's a thread about Brexit as well. So if you're not sick of it yet, then there's plenty of places where you can go and talk about it more.
There certainly is. So look forward to seeing you there tonight. But before we go, we've got the resource of the week, which is an absolute cracker, and we'll let you know what's coming next week. But before we do, a huge thank you to Kev, who's left us this awesome review. Rob and Rob are great at sharing their knowledge, as well as being motivational and inspirational. John Lee Dumas on Entrepreneur on Fire says, "You're the average of the 5 people you spend time with. The 2 Robs would be in my 5. Great stuff, guys. Please keep it up. I'm about to start in property and I feel that you guys will be there to help me." Thank you very much, Kev. That means if we're in your 5, you'll probably be an optimistic fellow, but terrible at predictions.
Yeah, indeed. Thank you, though. That's a fantastic review. Thank you also to Charles, who's provided this week's resource of the week. This is one that I haven't looked at, Rob, yet, but you have, and you think very highly of it.
Yeah, finally Microsoft have made some software that's good.
What?
Yeah, I've got one friend who loves Microsoft stuff. Very odd. Anyway, this app called Office Lens is absolutely brilliant. You can get it on your phone. And basically what it does, it's a scanner for your phone. And I know these apps exist and what's new about this, but it just does it so well. After Charles recommended it, I downloaded it and I play with it. And it's got a few options for taking documents, but the way it captures it, the technology, I don't understand how it does it, but it makes it clearer. It understands where your document is. It cuts out the stuff that isn't relevant. But not just documents. I'm a whiteboard person, where when I need to get stuff out of my head, I'll just go crazy on a whiteboard and then I'll take a photo. But often the photos, you have to then zoom in afterwards. Again, it's got a whiteboard setting that knows where the whiteboard is, gets rid of all the wasted space, and maximizes the photo and the image, so therefore the document it becomes. You can then, the only downside and my only moan about this is then send it on to other Microsoft products, like their cloud storage service, which I don't use, or Word, or wherever else. So the slight downfall at the end, but if you set up some zaps possibly to send it from Microsoft's cloud to a better cloud like Google Drive or Dropbox, well, I say better, just they're the ones I use, then it'll probably work for you. So I might go through that pain just because the app is so good. Very good app, really worth checking out. Super impressed with it. It's free as well. So thank you, Charles. Great resource.
Yes, thank you very much. And we will put the link to that, of course, in the show notes, which are at thepropertyhub.net/Brexit. And I'll just give a quick shout out on the same theme to Evernote, which I went away from for a little bit. I fell out of love with Evernote, but I came back to it, and they've recently upped their game when it comes to scanning as well. I don't know if it's as good as Office Lens, but you can scan whiteboards and it works really well. You could also scan business cards, and it's pretty much like magic. You can scan a business card, it puts all the information into your contacts, finds them on LinkedIn. How it does this stuff, I do not know, but it's quite exciting because all these technologies that we've had for a while and have been a little bit hit and miss now seem to be like really coming into their own. So exciting times. I'll put links to those extra bits in the show notes as well. propertyhub.net/Brexit.
Okay, so next week, we've done a couple of episodes on Brexit now. We had quite a self-indulgent episode about what we do. I hope you enjoyed that one. But next week, we're going back into the thick of it. I'm going to look at what you should do when your tenant is in arrears. So it's going to be a little bit more tactical than boot them out. So we're going to look at all the steps you should be taking from a legal point of view and emotionally and a systems point of view to make sure that it causes the least disruption as possible and the things you can do to prevent it happening in the first place. So we'll look at that next week. It's going to be a very valuable episode.
Yes, it will. It's every investor's worst nightmare. It's never going to be the best thing to happen to you, but it can be a lot less bad if you know what to do. So that's what we're going to talk about next time. In the meantime, though, if you are listening to this nice and promptly on the day it comes out, then get along to a meetup tonight. We will see you there if you're in Leeds or you're in Leamington Spa. But if you are not decided yet about where to go to thepropertyhub.net/meetups and you'll see the full list. Otherwise, though, if we don't see you at a meetup, we'll see you back here for another episode of the Property Podcast next Thursday. Bye for now.
Bye-bye.
Thanks for listening to the Property Podcast. For show notes, all our past episodes, and to leave a review, go to thepropertyhub.net/podcast.